Hello traders, welcome back to FS Page. Today, we are tackling one of the most crucial skills every trader needs: how to enter and exit trades like a pro. Perfecting your entries and exit can mean the difference between consistent profits and frustrating losses. Stay with me until the end because I will share advanced tips that even seasoned traders use to stay ahead of the game. You don't want to miss it. Let's start with the basics. Why do entry and exit strategies matter so much? A well-timed entry ensures you are getting into the trade at the best possible price, maximizing your potential profits. Similarly, knowing when to exit locks in your gain and protects you from unnecessary losses. Without these strategies, you are essentially gambling, and we are here to trade smart, not gamble. The first method of entry that I want to share with you is the aggressive way of entering a trade. For example, here is the bullish chart on USD card. And if you look at this chart carefully, you can see that price is consolidating between this zone. So a resistance has been formed around this zone. A support has also been formed around this zone. So price has consolidated within this zone. We have our resistance here, which is the ceiling, and we have our support, which is the floor. So as it is now, after this consolidation, price will either break out to the upside, and if that occurs, then we have a continuation. And if it breaks out to the downside, then we have a reversal. So watch to see. So we have this bearish candle that have closed outside the support line. So now we have a confirmation that the price is going to head down. And because we are trading aggressively, we don't need any other confirmation. What we'll do is that we'll place our sell order, or we simply enter at market price right around this zone, and we place our stop right above the bearish candle. Then our target, we can target this low or this low here. So I'll place our target around this zone, and you can see what is happening. See, though price retested it, but you can see it was a wash through. So this is how you trade aggressively. Another example that I quickly want to show you is a bullish example of how to enter a trade aggressively. So you can see price forming higher highs and higher lows, which shows that we are in an uptrend. But when price got to this point, you can see price is consolidating. And if you know how to trade chart patterns, you will know that this is a bullish flag. So let me draw it out for you to see. We draw from the top here to this level, and we draw from top here down to this level. And one thing with bullish flag is that it is a continuation pattern. So when you see a bullish flag, you should expect a breakout to the upside. So as it is now, we'll wait until there is a breakout. And as you can see, here is a bullish candle that confirms a breakout to the upside. And since we are trading aggressively, we don't need any other confirmation before we can enter this trade. But how do we determine our profit level? Where do we place our target level? And since it's a bullish flag, we simply measure from this point to this point, and we extend it from where the breakout occur to this point. So we simply enter at the close of the breakout candle, and we place our stop loss just beneath the breakout candle, and we extend this to this level. Here we are. See, our target has been hit. So this is how you enter trade aggressively. So when you are trading aggressively, one of the advantages of trading aggressively is that you have so much trade to trade and you hardly miss out on any trade. By the way, if you don't know how to trade bullish flag or rectangular pattern, you can check the link in the description. I have already explained how to trade these patterns. Another method of entering a trade that I want to share with you is the non-aggressive or the conservative way of entering a trade. This is the first example that I showed you, and at this point we have our breakout after that price came this low and there was a pullback. You can see this bullish candle and you can also see this doji and this bearish candle. This is an example of evening star candlestick pattern. Whenever you see evening star candlestick pattern, it's a signal that price is about to reverse. If you don't know how to read candlestick patterns, you can check a link in the description. I have treated this already. So whenever you see this kind of pattern, evening star is a signal that price is about to reverse. Don't forget, we are trading non-aggressively. So we have one confirmation, which is the evening star and this breakout. So we can confidently enter this trade at this point. So we place our sell order around this zone and our stop loss slightly above the bearish breakout candle, and we can extend this our target to this point. So what we have, so this is how you trade non-aggressively. You wait for more confirmation. And the advantage of trading this way is that you have so many confirmation before you enter a trade. You do your homework, you wait, because you end up having more quality trading opportunities if you have the patience to wait. But this means you'll be missing out on a lot of trades. But I'd rather miss out on a trade than losing a trade. So let's go to another example. So quickly, let me show you a bearish example of how to enter a trade non-aggressively. So we have higher highs and higher lows, so clearly it's an uptrend. And if you watch what is happening here, you can see the price has formed this resistance and this support. So this is a rising wedge. And if you don't know, a rising wedge is a reversal pattern. And what can you see here? You can see this hammer here. This is a rejection candle. The hammer is a rejection candle and it's also a reversal candle. So when we are seeing this, all we need to do is to wait for a breakout. And what we have here, we have our breakout candle. If we are trading aggressively, we would have entered this trade. But since we are not trading aggressively, we have to wait for more confirmation before we enter this trade. So we'll watch to see and see what is happening. You can see. So after price broke at this point, if we are trading aggressively, price would have come this way and reversed up to this point. And if our stop loss was here, we would have been taken out at this level. And if our stop loss was even wider than that and we place it around this previous resistance, we would also have been taken out. This is the supply zone, which is a highly contested zone. And you can see how it was our price was rejected here. And after the bulls went this high, you can see the huge drawdown that we have here. So this is tweezer tops, and tweezer tops candlestick formation is a reversal pattern. If you don't know how to trade candlestick patterns, check a link in the description. So this is a confirmation that this is a bearish trade. So at this point now we have the first breakout, the second breakout, and this tweezer top. So this is enough confirmation for us to enter this trade. So if we are entering, we'll enter at this point, we'll set our exit point as high as just slightly above the twister top. Then we can target either this point here, or this point here. In this case, we'll target as low as this swing low here. So we'll watch to see. So what we have, see, our target was hit. So this is how you wait and trade in a non-aggressive way. Now, let's talk about exit. Arguably the trickiest part of trading. Here's how you can master your exit. 1. Set targets before entry. Always have a clear profit target based on your risk to reward ratio. For example, if your stop loss is 20 pips, aim for at least 40 pips in profit. 2. Trade your stops. Use a trading stop to lock in profits as the trade moves in your favor. This ensures you capture gains even if the market reverses. 3. Partial exit. Consider closing half of your position when you reach your first target and letting the rest ride. This reduces risk while keeping you in the trade for potential larger gains. If you found this video helpful, hit the like button, share with your fellow traders, subscribe to this channel for more actionable trading tips. Which entry or exit strategy will you try next? Let me know in the comment below. Thanks for watching, and I will see you in the next video.